Jason here. In today's video, I'm going to try to once again answer what's going on in the stock market. With the stock market going up again for whatever reason. So I'm going to bring open some tabs here just so I have my information ready for you. Okay, so I'm opening up some tabs. While we're waiting for people to come on and wait for these tabs to open, please let me know where you're watching from, who's watching, where you're watching from, and if you have any questions about anything, investment, finance, stocks, business, coronavirus, etc. related. But the main topic of today's video is a continuation of what we talked about last week in last week's live of literally there's no reason the stock market should be going up, and that I thought the United States Federal Reserve was manipulating the market. Today we're going to talk more about this because last week if you guys want to watch the whole video, you can do that. Should be on the page somewhere. So I'm not going to go through the whole video. So I'm just going to give some context here about what we talked about last week, so we understand what we're talking about today. So last week, second week in a row, record unemployment numbers. Previous record was, I think, 609,000 in 1982, if memory serves me right. Then 3.5 million or 3.3 million, then 6.8. After the numbers got revised up, it was 6.6, then it got revised up to 6.8. This week, I think it's another 6.5 million. Again, let me see my notes here. And they've taken it off the main page of Mornings or of Market Watch. So at 6.5 million. So in total, we've got 17 million U.S. citizens unemployed in the last 3 weeks. Again, the previous record for 1 week was 690,000. We've broken that 3 weeks in a row now in the United States. The greatest, most robust economy in the world. Around 17 million people have filed for unemployment in the last 3 weeks. The number is probably closer to 20 million because there's a massive backlog. Just yesterday, the governor of Florida said the state of Florida is so far behind in processing unemployment applications online that the servers crashed because so many people are trying to go on, that I think he wrote an executive order telling people in the state of Florida that they need to file their unemployment claims by paper because there are so many people doing it that they're crashing the servers on the website, so nobody can do it. So the unemployment numbers are probably really closer to 20 million US wide, if not higher. This is not only the fastest rate of unemployment in United States history. Again, in the world's largest and best economy, 17 million filed for unemployment in the last 3 weeks. Staggering number of people. This likely puts, and they won't release, the United States government won't release this until I think mid-April about the official unemployment rate. But it should be anywhere right now today, based on today's numbers, anywhere between 12 and 15%. That is a higher percentage of people unemployed in the United States than during the Great Recession. And at any point in United States history since the Great Depression. I think the specific year was 1933 was the last time, and I'm trying to look at my notes here again. 1933, 1940 was the last time the United States had unemployment at this level. So at the tail end of the Great Depression, right before World War II started. Highest rate of unemployment since before World War II in the United States. Absolutely absurd numbers. Something, again, most of us are younger that watch this, my stuff on value investing and finance. We're talking about great-grandparents or grandparents, the only people alive today that have seen this in our lifetimes. 1940. Again, that's what, off the top of my head, 80 years ago. That's absurd. But the even crazier part is this is all due to the coronavirus shutdown and all this. This is happening worldwide. Again, most other countries, I haven't seen their numbers. I saw Spain's last week and UK's last week. I don't know if they're not reporting those numbers as much as the United States is, but I'm not seeing those numbers worldwide. So again, this is happening worldwide because of the coronavirus lockdown, the quarantine, shutdowns, all that kind of stuff. So this is happening worldwide. Estimate said that as much as, I think this was the Federal Reserve that said this, said that 29%, I saw this the other day, 29% of the United States economy is essentially shut down right now, and it has been for a couple of weeks. 29%. Estimates for unemployment are going as high as like 42, 47 million, which would put the U.S. unemployment rate as again, we're talking about absurd numbers here. I'm at 32%. Number the United States has never seen if it gets to that number. Not even during the Great Depression. So with all of this, horrible news. Horrible economic news. 29% at least of the United States economy shut down, probably a similar proportion worldwide. So essentially close to a third. What that kind of means too. So what, probably a similar proportion of government shutdown worldwide. About the 29%, that's probably a similar number in countries worldwide. It will vary by country, of course. If more countries like in the Caribbean their economies are based on tourism, it's probably more than that. But the 29% is probably a fair number worldwide. So that's like the world economy at my last check was an estimated $90 trillion, the GDP. So that's like wiping 30% of that off. So we're down somewhere in the $60-65 trillion range. That's like wiping the United States and probably a country the size of Germany off the map in terms of economic output. Staggering, just to kind of think about the scale of what we're dealing with. Financial news is horrible. Again, this isn't just a U.S. thing, this is worldwide. Coronavirus numbers, while kind of flattening somewhat, are still going up at an exponential rate. We passed 1 million cases worldwide, I think, 4 or 5 days ago, and just yesterday we went over 1.5 million already. So still going up at an exponential rate. The projections are not as bad in terms of deaths as it looked like originally, but these numbers are still bad. We're going to be in lockdown for probably through the summer, at least in the United States. They've already canceled school in South Dakota, where I used to live, for the rest of the school year. So the kids at worst or at best in South Dakota will go back to school in August or September of this fall. That's probably going to happen in most states in the United States. Again, horrible economic news. Dr. Fauci and other people, other prominent doctors are talking about potentially a lockdown, world lockdown, or some kind of quarantine for up to 18 months. If that happens, that's complete economic devastation for most small businesses. First of all, hopefully it doesn't go that long. But if it does, that's complete economic devastation for many small businesses and individual business owners and entrepreneurs and stuff like that. I don't even want to talk about that because that's scary to talk about. But with all this horrible news, economic news, health news, cases still rising at an exponential rate, death rate down, which is good. But still, this is going to go on probably for at least another 6 months, 3 to 6 months would be my guess, until we're quote unquote back to normal. And then again, even then, you see people like Dr. Fauci and Bill Gates and others saying that while there could be a lifting of the quarantine in the summer to a partial degree in the fall, because again, fall season and winter season is when most viruses and infections happen, there'll probably be another lockdown then, even if we do reopen things. So again, horrible stuff. With all this, you would expect the stock market to be massively down, correct? We talked about this at length in last week's video. It is not. The stock market has been going straight up for pretty much the last week. It was up almost just over 1,600 points a day last week. Yesterday it was up, I think, 700 or 800 points. Today, as of this rate, or as of this recording, it's up another 500 points, 497.3 points as of this video right now. Absolutely doesn't make sense whatsoever. Doesn't make sense whatsoever. To put this into context, or I'm going to try to put this in the context, is a better way of saying it, because frankly, I'm obviously not smart enough to know what's going on right now in the market. This is why I'm not a macro guy, because this makes no sense to me whatsoever, what's happening. This is why I focus on individual small companies at a very micro level. Macro stuff to a large degree often doesn't make sense to me. I mean, it makes logical sense if you think about it and you kind of take things to degrees, but this makes no logical sense whatsoever unless there's some kind of market manipulation going on. Because the stock market and company valuations are supposed to be based on future projected cash flow earnings. Nothing has changed in terms of cash flow earnings for these companies in the last week, other than they're going to be massively crushed in the second quarter. Estimates are saying that corporate earnings could be down 30% in the second quarter when they start reporting in, that should be May, June, July timeframe. Companies should start reporting their second quarter numbers. Estimates are down. They could be down as much as 30%. So if companies' earnings are dropping by an estimated 30%, that estimate is probably off by a large degree, either positively or negatively, because forecasters are terrible at forecasting, which hopefully you have noticed over the last couple of weeks as this craziness has been going on. But if corporate earnings, let's say they are somewhat correct, and corporate earnings are down, or cash flow and earnings are down 30%, the stock market to go straight up because of that makes no sense. So in my opinion, like we talked about last week, the Federal Reserve now can buy ETFs. They are legally allowed to buy ETFs, which means they can buy stocks. So I think that's what they're doing. I think they're manipulating the market. They don't want people to panic. They want to kind of put a floor on what the stock market's doing. Still doesn't really explain why it's going up, unless they're buying to a large degree, which gets me to my next point. Today, after the horrible unemployment numbers in the United States come out, United States Federal Reserve Chairman Jerome Powell announced that the Federal Reserve was putting another $2.3 trillion, or making available $2.3 trillion more of loans for small businesses and companies to kind of stabilize things. So here's a mental model of mine. And you probably saw me smile when I did this. When you see, and this goes for things like EBITDA, and I learned this from Charlie Munger and Joel Greenblatt and Seth Klarman and Warren Buffett and all these guys. If you see EBITDA, replace that wording for bullshit earnings or BS earnings, to be politically correct. If you see adjusted EBITDA, it means it's adjusted bullshit earnings or BS earnings. If you see the Federal Reserve talking about stabilizing the economy, think of them as manipulating the economy. Yes, it's probably necessary what they're doing because of the economic devastation. To the degree they're doing it, probably not. $2.3 trillion, and this wasn't clear in the memo that went out this morning. It wasn't clear if this is on top of the already, I think they said already promised $1 to $1.5 trillion of funds. So it didn't, the article I saw didn't say if this is new, completely new money, as in on top of that original $1.5 trillion, or if it was just an increase in the original amount. Either way, enormous amount of money. 2.3 to, let's say, $3.5 to $4 trillion. The U.S. economy in, I think the most recent number is 2018 and 2019, was about a $22 trillion economy. So that's like a non-governmental agency propping up 25% of the United States economy. in terms of loans and some other stuff and whatever they use it for. They frankly don't tell anybody what they use it for, except maybe the president, and I doubt he even knows, or Congress or whoever. They don't have much oversight. The Federal Reserve does not have much oversight. They can't get, nobody can look at their books for whatever reason, and this has gone on for years. This was one of Rand Paul's things years ago, is that he wanted the Federal Reserve to have oversight from, I think it was Congress in the United States, so that they could look at their books to see what their loans and their investments and stuff are in. They won't allow that. So, in my opinion, the United States government, in concert with the Federal Reserve, are likely manipulating the market. Again, I talked about this at length in last week's video. Is it necessary? Debatable. Probably, depending on the economic devastation. To the degree they're doing it, I think highly doubtful. Again, I think they're mainly doing it. Personally, I think they're doing it, the government and the Federal Reserve and governments around the world, I think either that they know things are a lot worse than they're saying in terms of the unemployment numbers and amount of GDP lost and corporate earnings lost, because they have information like this sooner than most entities. So they know kind of what's coming. I don't think anybody will be able to prove this, let alone me. But the stock market right now is just absolutely insane. I was talking to a colleague yesterday, and he said, and I'm going to butcher this because I'm not as eloquent as he is, but essentially he was talking about how the longer you invest in the market, the more it makes you realize how ignorant you really are about the market. And that is completely true, because this makes, again, zero sense to me unless the stock market is being manipulated. And if it's being manipulated, it's not fair for individual investors or even corporate investors or government investors, anybody, any investor at any level. It's not good for anybody, because if corporate earnings crash really 30% in the second quarter, the stock market, if it doesn't crash, that should be proof right there that the market is being manipulated right now. But if it does crash, what is the Federal Reserve in the United States government supposed to do, and world governments or governments around the world, what are they supposed to do if corporate earnings fall 30%, which means companies have 30% less money, which means companies have 30% less profits, which means they may have to fire 30+% of their people, or not invest, or you're seeing this already, they're cutting back on investments and capital expenditures and growing their businesses. They're raising cash by cutting dividends and research and development and cutting share buybacks. Again, all probably good. Companies need to have more cash. They have far too much debt on their books for my liking. They're far too highly levered. There's not as much margin of safety as I like. These are all probably good things. But again, that will lead to massive, even more massive unemployment than what we're seeing. If companies are making 30% less, and most companies' profit margins are under 5%. Let's go a little bit higher, 7.5%. Most companies' net profit margins are under 7.5% on average. Most of that number, they're under 5%. Most companies do not make as much money as people think. I know this because I've literally studied thousands of companies all over the world, looking at their profit margins, reading the financial statements. So this isn't just some political thing. This isn't just a belief thing. This is me actually putting in the work and doing the data and looking at the data. Most companies worldwide make profit margins below 7.5%. And I would say probably at least 80% of those companies make profit margins below 5% on a consistent basis. If these companies are making 30% less on their profits, they may have to fire people en masse. Doesn't matter what kind of bailouts are. Again, it won't matter the stock price. If the government is manipulating stuff, it won't matter, because again, I'm trying to find the data for that, but I can't find the data on how much corporate earnings dropped during the Great Depression or the Great Recession. I haven't found that specific data yet. I can't imagine it would be over 30%. That's just an insane number. Again, you earn $100,000, 30% like that. Then you still have to pay taxes on the rest. Then you still have to pay your people. Or then you, you don't pay taxes on, or you pay taxes. Net profit is after tax. I usually talk about operating profit, which is before taxes. So, and most companies don't have a lot of cash on their balance sheets right now. Most of them are highly levered with that. Another thing I've noticed about after researching companies worldwide is most companies are pushing out their payables period significantly, like 30 to 75% over the last 10 years. What that means is the suppliers are getting paid less often. Let's say it was 30 days in 2010. Most companies are either 60 or 75 days now. So they're, instead of getting paid in 1 month, they're getting paid in 2 or 2.5 months. This leads to cash flow problems at that company. This leads to, if things are shut down for 3 months, those companies are going to have to lay off even more people. This whole thing is a moving tower of cards. Have you ever seen somebody build a tower of cards or a castle of cards or whatever? The house of cards, the proverbial house of cards, is what this is, but it's all moving at the same time. This is all moving with the coronavirus stuff and the economy stuff. And to get back to my original point, it makes no sense why the stock market is up today. None. Doesn't matter how much the stock market is cheering, essentially, is what the market going up by 500 points means. The market is cheering that the Federal Reserve is putting $2.3 trillion into the market. I don't understand why people are cheering that. That's essentially when they're saying they're stabilizing the economy, that means they're manipulating the economy. They're trying to make it look not as bad as it really is. They're trying to not show you real data. Again, when the corporate numbers come out, they can't really fudge those numbers. Even with the manipulation, if they fudge those, they can't really fudge those numbers because those are public company stocks. They aren't overseen by the Federal Reserve, and the Federal Reserve can't manipulate that money, or can't manipulate those that data in the financial statements and all that stuff. That's done by auditors. Auditors vet that stuff. So that can't be done. So when the real economic data will be in April, when the U.S. releases its updated job loss report and unemployment numbers, which should be horrific. And then May, June, July timeframe when companies report their second quarter earnings. If they're really down 30%, things are going to get really bad in the economy. Again, and I'm laughing, but I'm laughing in a nervous way, not in a funny way. I'm laughing in a nervous way because that's, again, devastation is what we're talking about. And for the market to go up 500 points on a day that we just finished announcing that 17 million Americans have filed for unemployment in the last 3 weeks, just destroying the previous records, makes no sense to me. Again, but maybe this is why I'm not a macro guy, because I find this stuff interesting, but I don't do this. This is not what I look at when I look at individual companies. But logically, it doesn't make sense. Yes, I know in the short term, markets are run on emotion and momentum and stuff like that. But again, what's the emotion and the momentum? Everything looks horrible in the economic news. Almost everything looks horrible in the health news. It doesn't, logically, it just doesn't add up to me. So this is why, again, video number 2 on why I think the market is being manipulated by the United States Federal Reserve right now. And what's going to happen in the next 2 to 3 months if the entire world stays on lockdown. It's going to be really bad. To put this into kind of context, how bad? Pretty much every private company I've talked to over the last couple of years has less than 3 months of cash and cash flow on their balance sheet, or less than 3 months of cash on their balance sheet and cash flow on their cash flow statement. Which means if they aren't getting paid for 2 to 3 months, they're going to be out of business. Most public company stocks, and again, 1996, I've got it on my data, 1996 companies in 36 different countries worldwide. 80+% of them do not have enough cash to cover debt payments. Hit myself in the glasses there. If they're not getting new payments in terms of cash flow. If businesses are shut down, they can't earn cash. They can't earn revenue. They can't earn profits. They can't earn cash. So if things aren't back to normal, it's been in the United States, it's been probably about a month now since the craziness started. Probably about 3 weeks until most of the lockdowns in the United States went into effect. In some parts of the world, this is longer. In some parts of the world, this is less. But if your country or your area goes 3 months on lockdown with only quote unquote essential jobs opening and people working, that's going to be devastation for the economy. Again, this isn't just from guessing. This isn't from politics. This isn't from beliefs. This is me looking at companies worldwide, what their balance sheets and cash flow statements are saying. Economic devastation is what's going to happen. We'll start seeing this probably. I don't believe China's numbers for 1 second. First of all, on anything economic, the death toll numbers, the sickness numbers, any of that. I don't believe any of that. So the real numbers are going to be from countries like Italy and Spain. If I sell where you are, real numbers are going to be first from Italy and Spain, the two hardest hit countries outside of China that kind of went the fastest. Businesses, again, you should be, I think, 2 or 3 weeks ahead of the United States. So you're probably about a month and a half in to your lockdowns, quarantines, whatever. If I sell, if you're still watching, let me know how long you've kind of been on lockdown. I know one of my students is in Italy. He's been on lockdown since early March, I think. So we're about a month and a half in. If we get to, let's say, late May, early June, and those countries are still mostly closed, businesses are going to be hammered. Again, and this isn't just in those countries. This is going to happen kind of at a cascading event worldwide, because countries and states worldwide went on lockdown and quarantine at different times. So 3 months out is kind of again, based on the data, based on the cash flow statements, based on the balance sheets. Lockdown still going on and fully closed. Okay, same here mostly at least where I'm at in the Tampa, Florida area. It is, we're not on lockdown, but we're at a stay-at-home order, which means unless you're an essential worker or you're going to get food or you're going to get medical care, you're not supposed to leave. I know my student in Italy, he said it's legitimately on lockdown. Like, you can't even leave the house unless you have a note. Same thing with my teammates in the Philippines. They're in Manila, or most of them are in the Manila area. You're not supposed to leave the house unless you have a note. The Filipino president actually the other day, I think it was last week, said that if people are breaking the quarantine and they're not supposed to shoot them dead. That's how crazy things are getting in certain areas worldwide. So 3 month mark from the time you went on kind of quote unquote lockdown is what you really need to watch for. So in the United States, we're still a month and a half, 2 months out. If this goes on if we're on lockdown until end of May, June period, big trouble. Same, Spain and Italy, you're going to be a little bit sooner than that. If you're still on lockdown at that point, big trouble. And we're talking about businesses, not just kind of like you said, Faisal, not businesses temporarily laying people off or furloughing or whatever the terminology people are using. We're looking at businesses not opening again. That's restaurants, hotels, Airbnbs, potentially, depending on how long this goes on. People might get out of the Airbnb business. What else? Restaurants, hotels are going to be the big ones. Airports going to be in trouble. And others like that. Casinos are probably going to be in trouble. Anything related to the travel industry, the tourism industry, going to be in trouble. Travel agents, cruise ships, be in massive trouble. Stuff like this, massive trouble. again, and we're going to be looking at people not just kind of being temporarily laid off or furloughed or whatever. We're going to be looking at permanent job losses because people have to eat. If they're getting payments from the government, which some countries are doing, again, that's probably needed, it's probably necessary. But banks can't go 3 months without getting paid. If they do, I talked about this in the last week's video. If banks go 3 months without getting paid, many banks are going to close because they don't have enough operating kind of wiggle room to go 3 months without getting paid. If banks go out of business or need a bailout or whatever, credit will tighten and nobody will be able to get a loan for homes or businesses or commercial properties or whatever because there won't be any money available. The credit markets will tighten. And again, I don't see, not only does the market not make sense, but I don't see why more people aren't talking about this. People, of course, are worried about the health factors, are worried about the death factors. I understand that. I completely 100% get that. But you can't forget about the economy either. Because again, if people are healthy and we smooth out the curve and people are healthy, but we have to shut down for 3 to 6 months or 18 months in the worst case that I've been seeing, people aren't going to have any money. An estimated 30% of Americans are in quote unquote these non-essential jobs. Let's say this is worldwide again. If 30% of people are in these quote unquote non-essential jobs, restaurants, hotels, cruise lines, all the stuff that's pretty much shut down right now, 30% of people are going to lose their jobs. 30% of businesses estimated are going to go out of business. 30% of people are going to lose their jobs. 30% of people in the whole world aren't going to be able to pay their bills. Banks aren't going to be getting paid. Car loans, all that stuff will go away for whatever. Again, I don't think it will get to this. I think there will be some kind of more market manipulation by governments worldwide. But I don't understand why more people aren't talking about this. Because again, and I saw Michael Burry, a great value investor. He's in the movie The Big Short, if you saw that, or his character is played by Christian Bale in that movie, Big Short. He called the 2008 return, or the 2008 crash, called it, made billions of dollars off of it. Would have made more if his investors listened to him, but they pulled a lot of their money out. He said, I think it was just yesterday, he said that the economic damage that we're doing to the world's economy right now, yes, I can, Stacy. He's saying the economic damage that we're doing to the economy right now is going to be far worse than the health devastation that we're going to deal with. Because again, he knows what I know after doing the research, that if companies go 3 to 6 months without getting paid, they're going out of business possibly forever. People have to find some way to make money. And if they aren't getting cash flow in what they're doing, most people can't go 3 to 6 months without getting paid. They have kids, they have families, they have to buy food. Again, yes, this will be supplemented by government stimulus checks if in countries that are getting the government stuff, unemployment insurance for companies that have that. But like my teammates, they said there's no unemployment insurance in the Philippines. So what's going to happen to countries like the Philippines? The country I'm most worried about is India. Everybody's so tightly packed and there's so many poor people in India. What's going to happen if the coronavirus just completely devastates that country? They don't have access to high quality healthcare. A lot of people are extremely poor, literally not like poor in the United States poor, but literally living on the streets to a degree that's not seen in the United States. And it's just, again, I don't understand why more people aren't talking about this kind of stuff. And it just, frankly, it angers me. Because again, yes, the health stuff is important. Yes, keeping your loved ones is safe and is important. Yes, keeping the death toll low is important. But we can't just completely destroy the world economy either. Again, we can't go 3 to 6 months on complete lockdown, or frankly, I don't know what's going to happen. Massive bailouts, massive stimulus checks. I don't know what's going to happen. Again, I think the United States government and governments around the world that can will help their people. The United States, for example, will likely be fine in the long term and the short term. Most people in general in the United States will be fine. Canada, same thing. Western Europe, most of the countries, probably. Outside of that, we don't know. Again, these countries that don't have an unemployment insurance, that can't give their citizens money, that can't stop mortgage payments for 3 months, what's going to happen? We don't know. We've never seen something like this in world history. So, Faisal, does that answer your question about the temporary versus kind of final? Because if it goes 3 to 6 months with companies without getting paid, it's not going to be temporary. Unfortunately, it's going to be a long-term thing, because frankly, the businesses won't be open anymore for the most part. Stacy, you asked about the real estate market. Will the bubble burst? Again, I'm not a macro guy. But is the market overvalued, in my opinion, in terms of the real estate market in the United States? In general, probably a little bit. Is it as overvalued as it was in 2006, 2007, 2008? No, I don't even think it's close to that. The big thing is going to be, though, for me, in terms of the real estate market, is going to be the banks. Again, if they go 3 months to 6 months without getting paid because people are deferring their payments, or whatever the terminology ends up being, because people can't be evicted right now. So this terminology that we're using is kind of fluid. But if banks go 3 to 6 months without getting paid, and people defer their payments kind of en masse, again, to 20 to 30% range, that's going to be devastation. Again, sorry to use that word again, but devastation to the banks, because they operate on the float. They operate on the kind of spread that they can loan money at here, or they can take money out here and they loan it to you here. So let's say they can take money out at a 0.5% interest rate and they loan it to you at 1% interest rate. They make the spread here. So what they do is they generally have very little profits and very little cash flow. If they're not getting money in all the time from loan payments and house loan payments, car loan payments, credit card payments, that kind of stuff, what's going to happen to the banks? 3 months, 6 months from now, again, we don't know. They might need a bailout. They might go bankrupt. In my personal opinion, I think many of them will probably go bankrupt. But they'll also probably be saved by the federal government as well, which again, just further and further talks about the growing debt rate in the United States, which people were freaking out a couple of years ago, hit 20 trillion. I think it's, I don't even know what it's at now with all the stimulus we're doing. So, but yeah, the real estate, those are my thoughts. Does that make sense? Do you have any other questions on the real estate? That's kind of what I'm thinking right now. But again, all this stuff is changing literally on a daily basis with all the information that's coming out. So, does anyone have any other questions about any of this? Do you have any questions about real estate, investments, stocks, personal finance, budgets, what I recommend in the next couple of days? Of course, Stacy. Oh, and in terms of you personally, because I know you were looking at a house at one point. At this point, I mean, everything is shutting down. I have no idea, frankly, when that's kind of going to happen either. I don't know. I mean, again, it depends on the banks, a lot of it, and stuff like that. But do I think it's the housing market is completely going to crash like 2007, 2008? I don't think that's going to happen. But again, if the banks start having major issues, then at that point, we don't know what's going to happen. So, because it frankly will get really bad. So for not only personal loans and stuff like that, but also, again, corporate loans and all that kind of stuff. So, okay. Is there any good value companies now? Would you buy now or wait a few weeks? Good question. So I've talked, Faisal, you and I have talked. I think we met over value investing. I'm looking every day at stocks worldwide. Again, in the last 20-ish days, I've researched 1,996 companies worldwide in 36 countries. In terms of value stocks right now, I've got 2 buy orders out there that have been out there for a week and a half, 2 weeks. And I've got probably 6 to 8 other companies that are good or that look like good investments. I still need to research further. But with the stock markets, again, since that point going pretty much straight up, my buy orders haven't been hit, or they haven't been filled, sorry. And at this point, until everything by my estimates, this is how I'll kind of rephrase that in a simpler way. By my estimates, again, this is just based on the data of researching all these companies all over the world. By my estimates, companies would have, their stocks would have to fall by another 30 to 40% to be considered cheap. Right. Again, I'm a super conservative value investor. But if somebody tells you stocks are cheap right now, even to a small degree, I would watch out. To me, they're not even close to being undervalued. I'm still looking, still getting prepared, still researching, because at some point I think the market is going to crash badly. Again, not even necessarily because of this coronavirus stuff. This has been building for years. The stock market, in my opinion, has been overvalued for 5 or 6 years now. And I haven't bought anything in 5 years because the valuations have gone pretty much straight up like this with the stock market. So this has been building for years. I don't think this is necessarily coronavirus related. But frankly, companies are overvalued even before this, and they're still overvalued even during this crisis, because again, the manipulation that's going on in the stock market. So I will let you know if I find anything for sure. But right now I've got 2 buy orders out, another 6 to 8 companies that look good that I still have to research. But unless, one of my buy orders, here's actually the illustrated point. I'll tell you a story. So literally I got back from Puerto Rico for that pre-planned trip for my father-in-law's services. He passed away in January, and we had his services down in Puerto Rico pre-planned before all this craziness started. We left on March 11th, and we got back on March 19th. I researched as much as I could while I was in Puerto Rico with intermittent internet we had access to. Got back, researched a lot more, found a stock I wanted to buy. Literally, I was going to buy it that morning. Had the buy order, or had the page at my brokerage up, getting ready to buy it, put a buy order in. The stock shot up in the next 3 days, 45%, because they announced that they were going to do massive buybacks and asset sales to raise cash. Another company was going to buy it the next day. This is a completely different company. 2 days later, was going to buy it, had researched it enormously in the past, so I just needed to do a little bit of updated research on it. Was going to buy it, shot up 20% the day I was going to buy it. I'm pretty much no news, just because the overall stock market is going up again. This is what's happening right now with me personally, is I'm finding stuff to buy, but it's going up before I can buy it, like substantially. Another company doubled from the day I was going to buy it on no news. Doubled within like 4 days from what I was going to buy it at. Doubled in price on no news. So this is the kind of stuff I'm sure you're dealing with as well if you're looking. That's stuff I'm dealing with right now. Is I'm looking, I'm finding stuff, but the values are just not there right now. So I'm finding stuff that's, some of the stuff I really like is about fairly valued right now. It was undervalued when I found it, but because prices have gone up so much since then, they're about fairly valued now. And for the most part, unless the company has huge competitive advantages and stuff like that, I'm not going to buy something that's fairly valued when especially, again, I'm not a macro guy, but I think the market is being manipulated right now. So I want especially an even bigger margin of safety right now. So that's why I'm not buying. Have you found anything good? Most of the countries that I found the most kind of value and good stuff in so far, Hong Kong, Indonesia, Philippines to a degree. Australia is about fairly valued, maybe just slightly overvalued in general. In terms of the good stuff I like, most of the stuff is still overvalued, but in terms of the stuff I like, it's undervalued or about fairly valued right now. Good question. Italy, still overvalued in my opinion. France, there's some good deals in. But again, things are still going up so much that it doesn't frankly matter at this point, because then anytime I try to put in a buy order, just straight up, like you said. So Steve asked, I thought we went from an average 14K from 2008 to now. What's considered a crash? So what we dealt with in probably mid-March, where the stock market fell, 40% in a few days, that was a crash. All-time high, I think, was for the Dow Jones was like 29,992 or something like that in February. And then it crashed by about 40% in like 40 days, something like that. Some craziness like that. Problem is, since then, I put literally hundreds of hours into research into finding one investment. So I'm researching stocks constantly as I do this, or as I'm making content and stuff like that. I'm researching stuff constantly, but it takes a lot of time. So by the time I research something to where I'm comfortable with it, sometimes it goes up. Again, most of the time this doesn't happen because the stock market doesn't go down 40% and then up 20%, kind of like that. It usually takes months or years to kind of go up and down like that. This crash is happening, or it happened rapidly, and then it shot up rapidly again. So it's made it incredibly hard to buy anything because of my process. Could I speed up my process? Not really, to be honest, because I put in enormous amounts of due diligence, and I want to know everything I possibly can about a company before I recommend anybody buy it, because I manage portfolios. That sometimes it's going to happen. This is sometimes going to happen where I miss out, quote unquote, on something because of my long research process. But I'd rather do that than make more mistakes by rushing. So I hope that makes sense. But yeah, we experienced a crash in early mid-March, and now again 40% crash in about 40 days. Then it rose up, and I don't even know what it's at right now. 20. Let's see here. 20. Stock market right now is just under 24,000. So, yeah, up 542 points as of this writing. So yeah, this, in my opinion, I mean this was more like the 1987 the flash crash, or the flash crashes earlier in the decade, where something just falls and then it goes pretty much right back up. That's what we're seeing right now. So this isn't a true crash like in the kind of historical sense. This is more of a modern thing, because it's a lot of this trading that we're dealing with now is based on algorithms. So for example, if when the crash originally happened in March, once an index, let's say for example the Dow Jones goes down 10%, the algorithm will trip and will lead to more selling by institutions and companies and stuff like that. So a lot of stuff we saw then was due to the algorithms tripping, and then other algorithms causing even more selling to happen. That's why stuff crashed so fast. And that's why you probably saw news about the what they call it, the market, not the tripwire, but the on the futures trading and stuff like that, where the market goes down 5% in a short time period, it'll stop trading. That's based on algorithm as well. So that, yeah, a lot of the stuff now, the ups and downs in terms of that stuff is based on algorithms. In terms of the why it's going up, I think it's market manipulation. I have no idea other than that. But does that answer your question, Steve? Yeah, if I sell that, I feel you. That's exactly. Went to buy 2 different stocks on 3 days apart, shot up like crazy. 1 on no news, or 2 on no news. 1 on literally the morning I was going to buy it, 40% up because they announced a massive buyback and asset sales and stuff like that. So another one doubled 3 days after I was going to buy it. And it happens when you have a process, an in-depth process, and you want to know as much information as possible. Yes, sir. It happens. I mean, but again, I'd rather have my process, which I know works because of the returns I've generated over the last 8 years, works really well, I'd rather miss out on potential investments like that than make more mistakes. So, does anyone have any other questions before we get off here? We're running at about 50 minutes now. I could talk about this stuff for days, but I don't want to kind of just bore you guys to death either. So, if you don't have any more questions, or if you have more questions, put them in the comments relatively quickly. If not, I'm going to get off of this soon. If anybody has any personal questions about retirement funds or budgets or buying houses or selling houses or anything like that, let me know. Send me a message, shoot me a message on Facebook Messenger, or if you have my cell phone number, shoot me a text message, whatever. I can talk about that stuff personally with you. But if you have any kind of general questions about any kind of this kind of stuff, let me know. But again, like I've been ending all these videos, here's my two main recommendations for the coming months. We're in unprecedented times. I've studied an enormous amount of world history and financial history. I cannot recall a time where the economy just stopped like it's doing now in world history. So what I'm recommending everybody do is build cash, your cash reserves, your emergency fund, whatever you want to call it. Stay healthy. Those are the two best things I can recommend right now, because again, unless we get some more clarity on what's happening from the government or the coronavirus, or how long this is going to last, or how long it's expected to last, or just kind of not what we're doing now, which is playing it by ear. Those are the two things I recommend until we get some more clarity on what's going to happen. Have you ever tried aftermarket investing if there's some good news? Not really. Yeah, no. What I do there is, personally, good question. I don't think it's worth it, especially today, because again, all-time U.S. unemployment record numbers for the last 3 straight weeks. Last week, when the record first was, or the 6 points, I think it was 6.6. Now it's 6.8 after they revised it, came out. I think the market went up that day as well. The market went up today, again on horrible news. And so honestly, I mean, if you're a better forecaster than I am, maybe go for it. I'm a terrible forecaster. That's why I don't forecast in my investments. That's why I base my investments and my thesis off of what the company's doing now, what's it done in the past. I treat everything in the future, because I do study the future and what the company's doing in the industry and the industry economics and all that kind of stuff. But I treat it all as icing on the cake. If it happens and it's good, great. That's extra kind of oomph that the stock should go up. If it's negative, then I look at it kind of in a bad light and do more research on it. But that's my process. Again, if you're a better forecaster than me, and you're better at reading market emotions than I am, it might be worth it. For my personal style and my personal makeup, I would be horrible at it. So I'll keep sticking to long-term investments, and not try to play the emotions or the short-term momentum moves or stuff like that, because again, frankly, I would be terrible at it. I would lose a lot of money at it. So I'll keep to my circle of competence here and deep value investing for the long term. So getting back to my original point, build cash, stay healthy. If you can do those two things, and you should be relatively good. Again, we don't know how long this is going to last. We don't know if it's going to last another month, if it's going to last up to 18 months. Build cash, stay healthy. Those are the best two things I can recommend to anyone. If you have any questions, again, reach out to me personally on Facebook Messenger, or via my text message or email, either one. And I'll probably do these videos at least once a week, maybe twice a week, to keep answering your guys' questions and helping you, frankly, stay away from the scammers that are going to be coming. They still haven't come yet. I'm surprised. But they're going to be coming, and they're going to be trying to take advantage of people that don't know what they're doing, or people that are playing on their emotions, or people that are panicking. Scammers are going to try to take advantage of everyone that can do that. I'm going to try to make these videos to help you avoid that stuff. Yes, I think things are going to get bad in the short term, especially they're not looking as bad health-wise, which is great. But in terms of economics, again, possible devastation in the next couple months. And I'm going to do these continue to do these. Try to help you and as many other people as I can. So thanks for watching. I don't see any other questions right now. So thanks for watching. Until next time, I'll talk to you soon. Have a great weekend. If you're in the U.S. or somewhere that celebrates Easter, have a great Easter. And if you're dealing with kids at school like I am, take a break if you need to. we had a rough morning this morning with my oldest daughter and her writing homework. So take a break if you need to. Don't stress each other out. And again, raise cash, stay healthy. Until next time, talk to you soon. Have a great day.